Right now, millions of Americans are paying for their home 3 times over. Not because they made bad decisions, but because almost nobody sits down and explains exactly how a mortgage works and how to stop giving the bank more than you have to. The amortization secret. Let's start with the biggest secret in real estate. When you take out a $400,000 mortgage at 7% interest over 30 years, your monthly payment is about $2,660. But here's the part nobody shows you at closing. In your very first payment, only about $326 goes toward actually paying off your home. The remaining $2,334, that goes straight to the bank as interest. That's almost 88 cents out of every dollar going to interest on day one. This isn't a glitch. It's built into the system. It's called amortization, and it's the mathematical backbone of every standard mortgage. The way it works, interest is calculated on whatever balance you still owe. So early in the loan, when you owe the most, you pay the most interest. Month after month, the balance drops, slowly at first, and eventually, the math tips in your favor. But here's what that means over 30 years. On that $400,000 mortgage, you'll pay the bank an additional $558,000 in interest alone. Total cost? Nearly $1 million for a $400,000 home. The system isn't designed to hurt you, but it is designed to benefit the lender. Rate versus APR. Know the difference. Most people think their interest rate is the same as their cost of borrowing. It isn't. When you shop for a mortgage, you'll see 2 numbers, the interest rate and the APR, or annual percentage rate. Here's the critical difference. Your interest rate is the base cost of borrowing. The APR includes the interest rate plus fees, origination fees, mortgage points, closing costs, all spread across the life of the loan. So a loan advertised at 6.75% might actually have an APR of 7.1% once all fees are factored in. That's a meaningful difference on a 30-year loan. Always compare APRs, not just interest rates, when you're shopping lenders, and always ask for a loan estimate. It's a standardized 3-page form that lists every fee, every cost, every number. Lenders are required by law to provide it within 3 business days of your application. Get it, read it, compare it across lenders. The refinancing window. Now let's talk about refinancing and when it actually makes sense. Refinancing means replacing your current mortgage with a new one, usually to get a lower interest rate. If rates have dropped since you bought your home, this can be a powerful move, but it's not free money. The math matters. Here's the calculation you need to run. First, figure out what your new monthly payment would be. Then subtract it from your current payment to find your monthly savings. Next, add up the total closing costs of the refinance. This is typically 2 to 5% of the loan balance. Finally, divide the closing costs by your monthly savings. That number, in months, is your break-even point. For example, if refinancing saves you $200 a month but costs $6,000 in closing costs, you break even in 30 months. If you plan to stay in the home for at least 3 years, refinancing makes sense. If you're moving in 2 years, you'd actually be losing money. The break-even calculation is simple, but most homeowners never run it. One more critical thing. Be careful about refinancing to a new 30-year term if you're already years into your mortgage. Even with a lower rate, you could end up paying more total interest because you're restarting the amortization clock. Sometimes a 15-year refinance makes far more sense even if the monthly payment is higher. The power of extra payments. Here's one of the most powerful tools available to any homeowner, and it costs you nothing beyond what you're already spending. Making extra payments directly toward your mortgage principal can dramatically shorten your loan and save you tens or even hundreds of thousands of dollars in interest. On that $400,000 loan at 7%, if you pay just $200 extra every month toward principal, you cut 5 full years off your 30-year mortgage, and you save over $80,000 in interest. Add $500 extra per month, you save more than $150,000 and pay your home off nearly 9 years early. These aren't tricks. This is just the mathematics of amortization working in reverse. When the balance drops faster, the bank collects less interest. One important note: make sure your lender applies extra payments to principal, not to future scheduled payments. Call and confirm this. Some lenders don't apply it automatically. You may need to mark it on your payment or make a separate principal payment. The 3 biggest refinancing mistakes. Before we close, let's cover the 3 most common and most costly refinancing mistakes. Mistake number 1: refinancing just to pull out cash. A cash-out refinance can make sense, but only if the money goes towards something that grows your net worth. Using it to pay off credit card debt that you'll just run up again is converting short-term debt into a 30-year mortgage. That's a trap. Mistake number 2: ignoring the real closing costs. Some lenders advertise no closing cost refinancing, but those costs don't disappear. They get rolled into your loan balance or baked into a higher interest rate. You're still paying them, just more slowly. Mistake number 3: chasing the lowest rate without reading the full terms. A lower rate with a prepayment penalty, steep origination fees, or a variable rate that resets in 3 years can end up costing you far more than the slightly higher fixed rate you were trying to escape. Here's the truth: your mortgage is probably the largest financial commitment of your life, and the banks have entire teams of analysts working to maximize what you pay them. But now you understand how amortization works. You know how to read your loan terms. You know when refinancing makes sense and when it doesn't. And you know how extra payments can literally save you years and hundreds of thousands of dollars. These are the tools that put you back in control. If this video helped you, subscribe to the Loan Desk. We break down mortgages, refinancing, and loans in plain language every single week. Hit the subscribe button and turn on notifications so you never miss a video. The Loan Desk. Knowledge is your best interest.